The IRS just released new final broker regulations, which greatly changes the current landscape regarding crypto tax reporting. For many years, really since the dawn of cryptocurrency, people are forced to get all the records on their own, put the records together, generate tax reports. And this is very unusual for the crypto tax industry versus something like the stock market industry. With stocks, at the end of the year, you get a beautiful form, a 1099-B, that has your gains, your losses, short-term, long-term, all of the information you need to report, and goes right on your taxes. With crypto, you're left going to the individual exchanges, downloading the reports, trying to make sense of it, and reporting on your own. And this has led to not a lot of people reporting to the IRS, and as a result, the IRS not collecting as much in taxes that they could have collected. So these new regulations put a requirement on brokers, typically the crypto exchanges, the people that are converting one crypto to another, and it requires them to report not only to the individual investors or traders, but also to the IRS, showing all of the information that you typically see with something like a stock market transaction that just hasn't existed yet with cryptocurrency. The IRS is getting more resources towards enforcement, towards audits and investigations. And one of the groups that has been commonly known to not be paying their fair share are crypto investors. And that's because, in part, all of these complexities and difficulties in reporting, and also that the IRS hasn't been getting the records to be able to verify or confirm if what's reported on taxpayers' taxes is actually correct. And so as a result, the IRS is collecting a lot less than they're entitled to. And this is known as the tax gap, or the difference between what the IRS would collect if they rightfully collected what they were supposed to versus what they actually collect, what people file and pay. And believe it or not, this amount is extremely large. And one group that typically, no matter what political party you're on, although this might be changing, that people agree should be paying their fair share are crypto traders, crypto investors. So this bill, these regulations, which now are going to increase reporting, should have the effect of decreasing this tax gap. Now, don't get me wrong, paying your fair share is subjective, and in the crypto world, it's not necessarily fair to expect the taxpayers to be able to calculate and report all of their transactions in a lot of different circumstances. Crypto taxes and crypto reporting is very complex, so it's not surprising that so many people struggle with it and there's such a large tax gap. So if you're struggling with it, it makes sense to come to a professional, someone like our firm, in order to help and get your taxes figured out. These new broker regulations, unfortunately, are not a silver bullet. They are not going to fix everything overnight. In fact, we saw a very similar thing with the stock market industry once the 1099-B forms started to be issued. For many years, cost basis information wasn't reported by brokers. And so it took years for it to be caught up and at a point where you can actually rely on these tax forms. And so with cryptocurrency, we expect much of the same. That for many years, your original cost basis, if you acquired before 2025 any crypto tokens, what you purchased it for, or your cost basis, is likely not going to be included on these forms. And so while things are going to get better, it's not going to be overnight, and it's still going to take a lot of work in the next few years to go through this transitional period where some information is being reported by the exchanges or the brokers, but not everything. And so the IRS will get some information and be apprised as to your crypto activity, but not have necessarily all your cost basis. And so now more than ever is the time to get all of your records together, start identifying your cost basis for earlier trades if you haven't, also to report on your taxes if you haven't, because the IRS is going to be getting all this information, which is going to not only create audit risks for you, but also now it's more important to be able to identify your cost basis so that you can use this information on future reporting as you file taxes each year. Now that you've gone through your crypto and identified your cost basis, one of the best practices is to amend your tax returns to report your crypto to the IRS. This can hopefully avoid an impending audit once the IRS starts to get all this information, and also reduce penalties or the chances of criminal investigation. So you shouldn't necessarily do nothing and just identify your cost basis and only update things in the future, but instead to go back, amend your tax returns, be proactive, and fully report all of this activity. And if this task is too daunting, and don't get me wrong, I completely understand, that's why these new regulations have come into effect. It doesn't necessarily mean, and in fact it doesn't mean at all, that you don't need to report. That means that you should contact a tax professional, have someone help you through the process. We help hundreds of clients every year properly report their taxes and avoid IRS audits. These new regulations will have the effect of issuing this new Form 1099-DA for tax year 2025, which means that as of January 1st, 2025, the brokers need to be accumulating and gathering all the information and data necessary to prepare these forms. And while this may seem simple at face value, it's actually a monumental task. It's nearly the middle of the year, and now these large organizations need to implement new procedures, figure out how to gather the data and prepare these forms. And there's very few tax and accounting firms out there from the beginning that understand crypto. And this is now a new added layer of complexity that's going to impact millions of people and has a very short timeline for implementation, less than half a year away. So these regulations are brand new and our analysis is still developing, but we are continuing to publish resources on our website, including a recent article that we published that dives into the broker regulations and Form 1099-DA. We've published an article on our website that goes through all the different scenarios of these new broker regulations, how you can comply, and a just wealth of information and resources on this topic. If you've listened to all of this and you want to fix your crypto taxes, the good news is there's still time and there is a path towards getting it done. The second resource that we have on our website is an article that talks through the different options and best practices for fixing your crypto tax returns for prior years. You can find both of those in the description below or at gordonlaw.com. I do offer consultations. I talk to people all week. I talk to people almost every day about their crypto tax issues. So if you're watching this and you want to talk about your unique situation, please reach out. But keep in mind, we do also have a wide variety of resources and articles on our website on this topic as well. If you know anyone that has crypto trading but has not reported on their taxes, share this with them. They're not bad people. Look, I understand crypto tax reporting is difficult. It takes a lot of time and effort. So share it with them, give them this resource, and help them be on the right track. Thanks for watching. Consider subscribing, and until next time.